What's going on YouTube? My name is RJ and this is the Gen Z Investor channel. Today I'm going to be talking about how I made over a 6% return in just 2 weeks on the stock market. So as you may or may not know by now, I'm a big proponent of selling option premium. I think that selling option premium is the only way to statistically make alpha consistently in the stock market. Now, I'm going to go over exactly how I was able to achieve 6% return on the stock market. I'm going to disclose the trade that I made, the specific underlying, additionally all the information that would be needed in order for you, the viewer, to make a similar trade on your own account. So if you've been trading options throughout the past couple months, you would probably realize that there hasn't been a ton of trading opportunities, and we only had a few occurrences where the VIX was actually above 20. So there isn't a lot of opportunities out there. Now, the stock that I sold a naked put on is called Square. So just a quick disclaimer, I do not think Square is a 5-star rated stock. Now, I would rather trade, say, JP Morgan over Square. However, given the circumstances that occurred over the past 2 weeks, I decided that the risk of making the trade was worth the return. Now again, I would rather trade something like JP Morgan in terms of if I had to pick a finance stock. However, over the past few months, it's been very difficult to find trades. So I think that's very important because I want to kind of disclose that I normally only trade the highest quality underlyings, and in this scenario I traded a company that I don't think is necessarily the best underlying to trade. So if you don't know the business model of Square, essentially they market several software and hardware payment products for a variety of different businesses. Additionally, they have payroll services and a bunch of other features to their kind of products that they sell to small and large businesses. Also, Square IPO'd in 2015. Therefore, this stock doesn't have that large of a track record, and again, isn't the highest quality underlying in my personal opinion. However, they have had $3.3 billion in revenue in 2018, and I decided that they are a high enough quality underlying for the given circumstances that we are currently in. So in my own personal life, I do see small and large businesses using Squares, whether it be coffee shops, restaurants. I know a local ice cream shop that uses Square. So I see a lot of kind of up and coming businesses using Square, and I think that's because they make decent products and will actually propel businesses to make better financial decisions with their payroll and their transactions. However, Square does have liquid options, so I decided that in this scenario, it is a decent underlying to kind of trade and make a quick profit. So about 2 weeks ago, Square dropped from $80 a share to around $65 a share. This was after they reported a weak forecast by a deceleration of payment volume. They also announced that they're going to sell their Caveat food delivery business. Additionally, a famous analyst downgraded from best pick to just buy on the Square underlying. So this sent the stock down approximately 20%. Again, when stocks go down in price, the price of the put options increase. So what I did from this information was I thought, okay, this is a decent time to sell a put. Now, again, this isn't the best quality underlying. However, I decided that, again, the risk was worth return. So basically how I decided that is I went on my tastytrade app and I looked at the price of the put options. I wanted to see kind of where they were at so that I can make a decision on should I trade. Now, the put options were trading for a lot of premium. So I sold a put option that was one standard deviation below where the stock was trading at that time, which was approximately $65. So I sold a $55 put about 45 days out to expiration, and I collected $1 worth of premium. So in the worst case scenario, if Square was to continue to correct down, I would own the shares at a cost basis of $54, which I feel like I am comfortable doing. However, if Square did continue to correct, I could just roll and manage that position because I sold a naked option and didn't sell a spread. Again, I like selling naked options because you can roll and manage that position if it does get challenged. So that $1 in premium translates to $100 per contract that I collected up front. With this trade, I had to keep $500 or approximately $500 in margin. Additionally, for trading options, you want to keep about 50% of your portfolio in cash so that you don't get a margin call. However, there is one thing I want to say about the 50% margin. You don't always have to have 50% margin, and again, it'll kind of vary between the stocks that have kind of opportunities to sell options in them, and additionally where kind of the VIX is at. If the VIX is really high, I'll actually keep less of my portfolio in cash because I think that that is a good opportunity to sell premium. When the VIX is really low and there's not a lot of opportunities to trade naked options on high quality underlyings, I will keep 80% of my portfolio in cash just because there's not that many opportunities to make a trade, and I don't think any of the put options that I would like to sell are worth taking on the risk to make the return, because once again, when stocks correct, the put options get expensive. So you want to wait for stocks to make a downward move and then you want to sell a naked put. Again, I usually trade about 1 standard deviation below the current market price on high quality underlyings, but set that aside. So again, in this trade, I had to hold a margin of $500 per contract that I sold. Additionally, I kept an extra $500 in cash in my portfolio just so that I don't accidentally receive a margin call. Additionally, if the underlying or Square in this scenario were to correct even more, I could just roll and manage that position by closing out that position, opening up a new options position to a later date and collect more time premium for that option that I sold, and I would not be required to put up any more additional capital. So in summarization, I basically was required to put up $1,000 in my account, and I made $60 to $65 off this one trade in just 2 weeks. So that comes out to about a 6% return on capital for about 15 minutes of work. Now, this is why I sell option premium, because you can make trades that aren't even in the most optimal condition, and you can make, in this scenario, 6 or 6.5% return on capital from just one trade. Now, most people would be happy getting 6 to 6.5% per year on their portfolio. However, in this scenario, I was able to make it in just 2 weeks. Again, this is why I sell option premium, because you have a statistical advantage by selling insurance, and you can manage your positions by closing early once they've hit a certain threshold of percentage of the collected premium. Additionally, you can roll and manage those positions if they do get challenged, collect additional premium, and basically wait for the underlying to move up past your strike price and close it out for a profit. In 2019, I have not had one single losing trade, and I've been profitable on every single trade. And I continue to strive to make that happen. And this is a trade that I made. If you have any questions, comments, or concerns, please leave them below. Make sure to like and subscribe and turn on notifications for my YouTube channel. Again, my name is RJ. This is the Gen Z Investor channel, and I really hope that you enjoyed me sharing my personal trades on my personal portfolio, and I hope you can use this information to make more money for yourself. Thank you. Peace out.